This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 12, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. The market has priced in a lot of optimism, but this week, the data does the talking, starting with Tuesday's Consumer Price Index. Last week, we checked the pulse of the market. Pulse, Grid, SPECTER, and Apex. Let's see how those calls held up. But first, let's look at the landscape. The macro backdrop is defined by sticky inflation and a flat yield curve. The 2-year, 10-year spread is just 35 basis points, signaling caution. The dollar is weakening slightly on a trade-weighted basis, but inflation at 4.17% keeps the Fed's hands tied.
Technically, the S&P 500 is testing resistance near $755. The Nasdaq is leading with a near 2% weekly gain, while the Dow and Russell are lagging, suggesting a clear style rotation toward large-cap growth and tech.
Crypto is decoupling from traditional risk assets. Iranian outflows and regulatory headlines are driving specific flow dynamics, while the broader market watches for a clear macro signal from Tuesday's CPI print.
Volatility is low, with the VIX at 15.03, but positioning tells a different story. Leveraged funds are massively short the Canadian dollar and long the Australian dollar, creating potential squeezes if commodity prices move.
The theme is divergence. Equities are rising on tech strength, but the macro data suggests underlying inflation is persistent. This week's CPI and ECB decision will test whether the rally has room to run or if it's hitting a wall.
Let's start with the macro landscape. Pulse, walk us through the economic calendar.
This week is all about inflation and central bank decisions. Tuesday, July 13th, we get the U.S. Consumer Price Index. That's the big one. Then Wednesday, July 14th, the Bank of Canada makes its rate decision at 2 p.m. Eastern. We also see Producer Price Index data on Wednesday and retail sales on Thursday, July 16th. Thursday also brings the ECB rate decision at 9:15 a.m. Eastern. And Friday, July 17th, we get industrial production and GDP now estimates. The yield curve is flat at 35 basis points, which is a caution signal. Inflation is still well above the 2% target at 4.17% year-over-year. The Fed funds rate is at 3.62%. The labor market is cooling but still positive, with non-farm payrolls at 158,000 and unemployment at 4.2%.
Grid, let's move to equities, earnings, and indices.
The S&P 500 closed the week at $754.95, up 1.4%. The Nasdaq 100 QQQ is leading at $725.51, up 1.8%. The Dow Jones Diamonds is at $525.78, down 0.4%. The Russell 2000 IWM is at $295.99, down 0.5%. The key earnings event is Netflix NFLX reporting after the close on Tuesday, July 13th. Consensus earnings per share is 79 cents. Netflix is down 5.5% this week and 10.5% over the last month. It's down 94.2% from its 52-week high of $1,274.17. The trend is range-bound. Last quarter they missed estimates, posting 70 cents against a 76-cent estimate. The sector read-through is for communication services. We also have a big day on Wednesday, July 14th, with JP Morgan, Bank of America, Goldman Sachs, and Wells Fargo reporting. And Thursday, July 16th, we have Bank of New York Mellon, BlackRock, and Morgan Stanley. On the sector front, energy is the leader, up 3.5%, technology is up 2.9%, communication services is up 1.9%, financials are flat, the laggards are materials down 2.2% and healthcare down 1.8%. The rotation is clear, growth and energy are out. Defensive staples and healthcare are in.
SPECTER, let's look at currencies and commodities. What's the risk picture?
The VIX closed at 15.03 yesterday, which is normal, but the range over the last 5 days was 14.96 to 18.91, so there's some latent volatility. In FX, the euro is at 1.1415 against the dollar. The pound is at 1.3402. The yen is at 161.71 against the dollar. Gold is at $4,111. The key positioning data from the CFTC as of July 7th shows leveraged funds are strongly bullish on the euro, with a net long of 1,696 contracts, and they added 2,164 contracts this week. They are also strongly bullish on the Australian dollar, net long 29,683 contracts, but they are strongly bearish on the Canadian dollar, net short 85,957 contracts, and they are strongly bearish on the Swiss franc, net short 7,218 contracts. Geopolitically, there's a headline about Iranian crypto outflows spiking 700% after U.S.-Israeli airstrikes, which is a risk factor for digital assets. And the Senate housing bill includes a CBDC ban, which is a regulatory signal for crypto.
CIPHER, let's talk digital assets. What's the setup?
Bitcoin is trading in a range, and the broader market is watching the macro data. The Fear and Greed Index is currently in neutral territory, which suggests there's no extreme sentiment to reverse. On-chain flows show stablecoin inflows are picking up, which usually precedes buying pressure. Ethereum is following Bitcoin's lead, but with slightly lower volatility. The headline about Iranian outflows spiking is a specific flow event, but it's not driving the broader market. The CBDC ban in the Senate housing bill is a positive regulatory signal, reducing the risk of a federal stablecoin crackdown. Technically, Bitcoin is holding above key support levels. If the CPI data on Tuesday comes in cooler than expected, that could drive a risk-on rally. If it's hotter, we could see a sell-off. The current setup is range-bound with a bias toward upside if macro data supports it.
Apex, let's bring it all together. What's the cross-market synthesis?
The dominant narrative is the tension between strong equity performance and persistent inflation. The S&P 500 and Nasdaq are near highs, but the yield curve is flat and inflation is sticky. This suggests the market is pricing in a soft landing, but the data is not fully supportive. The rotation from staples and healthcare to technology and energy is key. It shows investors are willing to take risk, but only in specific sectors. The CFTC data shows leveraged funds are heavily short the Canadian dollar and long the Australian dollar, which could lead to a squeeze if oil prices move. In crypto, the market is decoupling from traditional assets, driven by specific flow events and regulatory headlines. The key link is the CPI print on Tuesday. If inflation is hot, it could pressure equities and boost the dollar, hurting crypto. If it's cool, it could fuel a rally across all three markets. The ECB decision on Thursday is another wildcard. If they signal a dovish turn, it could weaken the euro and pressure European equities. The synthesis is, watch the CPI. It's the key that unlocks the next move.
Let's hear the weekly calls, one each, pulse.
The 2-year, 10-year yield curve is flat at 35 basis points, and inflation is at 4.17%. The Fed is likely to hold rates steady, and the market is pricing in no cuts for the rest of the year. With the VIX low and yield stable, I expect the dollar to remain strong. My call, DXY is neutral, target 120.00 by Friday.
Grid.
The S&P 500 is at $755, testing resistance. The Nasdaq is leading with a 2% weekly gain. The rotation into technology and energy is strong. With Netflix reporting on Tuesday, if they beat estimates, it could push the S&P higher. I expect the S&P to hold above $750. My call, SPY is bullish, target $765 by Friday.
CIPHER.
Bitcoin is range-bound, and the Fear and Greed Index is neutral. The CBDC ban is a positive regulatory signal. If the CPI is cool, crypto could rally. I expect Bitcoin to break above key resistance. My call, Bitcoin is bullish, target $62,000 by Friday.
SPECTER.
The CFTC data shows leveraged funds are strongly bearish on the Canadian dollar, with a net short of 85,000 contracts. Oil is trading lower, which pressures the Canadian dollar. I expect the Canadian dollar to weaken against the dollar. My call: dollar CAD is bullish. Target 1.4300 by Friday.
Apex.
The market is pricing in a soft landing, but the data is mixed. Equities are strong, but inflation is sticky. Crypto is decoupling, driven by specific flows. I expect the Nasdaq to lead the market higher. My call: QQQ is bullish. Target $740 by Friday.
That's our week ahead. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.